Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Hello again. Welcome back to the Emerging Managers Podcast. I'm Scott Kelly, your host and the founder and CEO of Black Dog Venture Partners. And you've been listening to this podcast for a while. You've realized that I've done several interviews with investors in the spirits and vice industries. And I've got another one. Jason Sherman is the co-founder of Top Shelf Ventures, and he's got extensive background. He worked for Anheuser-Busch, helping launch their global venture arm and founding and selling his own e-commerce company and distribution company. And then he launched Top Shelf Ventures, and it's a fund that focuses on early-stage alcohol and vice brands with a velocity thesis. I'm going to share more about that in a minute. He's investing in companies that generate high rates of sale. And Sherman, in the interview, you'll see that he believes the future of the industry lies in new categories like nicotine pouches and hemp-derived THC beverages, which are seeing significant growth and are poised to become the fourth pillar alongside wine, spirits, and beer. Jason emphasized that while celebrities, are good, they make good to kickstart a brand, but he emphasizes more celebrity involvement in the beginning and getting more customer love. We talked about that strategy during the interview, and it was really interesting take that he had on that. And from a founder standpoint, the alcohol and spirits and vice industries is tough. It requires founders that have grit, strong financial management, and which is crucial for the challenging and often aggressive alcohol industries. Investors should seek professional vetting for opportunities in this space, and that's exactly what Jason and Top Shelf Ventures provide. So give this great interview a listen, and I'll be back with some key takeaways. Well, hello, everybody. Scott Kelly, founder and CEO of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And I'm excited to bring in on Jason Sherman of Top Shelf Ventures. Jason, welcome.
Thank you for having me.
So, Jason, before we jump into the fun, why don't you share a little bit about your background prior to launching Top Shelf?
Yeah, I'm Jason Sherman. Background, I'm actually a lawyer by background, Harvard Law. I got into the alcohol space while working at a large firm. I got to represent one of the largest beer companies in the world when they were acquired. And then following that deal, I was poached over to help Anheuser-Busch InBev start a global venture arm. So this is back in 2015. It ended up becoming the world's largest alcohol venture arm. We deployed just under $1 billion in 3 years. We did about 200 deals. So I got to see a lot of what we'll call frontier alcohol projects everywhere from, we did the first hard kombucha acquisition in the space, first canned wine acquisition in the space, first canned cocktail acquisition in Cutwater. But we also did tons of craft beer all around the world. And the thing that likely put me on the map while there was work in the e-commerce zone. When we started in 2015, less than 0.1% of all beer was sold online. This was well before almost anyone knew Uber Eats could sell this stuff, DoorDash, that the world's a Drizzly. And I met these guys in Boston, the Drizzly guys, and helped set them on a path that allowed all 50 state AGs to approve investment from alcohol brands, approve marketing channels. And from there, moved on to start my own venture in the beer and e-commerce and distribution space in Taproom. TAPRM ended up being the fastest growing alcohol company in both 2021 and 2022 in the Inc. 5000 list. Big venture backing. Ended up supporting about 400 beer brands and hard seltzer brands with e-commerce and distribution in New York. Sold that business and then got together with my partner, Noah Friedman, and we launched Top Shelf in 2022, which, I can get into some of that, but the early journey really set me into a perfect position to start what is now, I think, the leading early stage alcohol venture fund in the world for
Awesome.
alcohol brands and vice brands.
Let's jump to Top Shelf. So talk a little bit about the fund's thesis, what stage you're investing, how you invest, any particular segments within the industry.
Yeah, it's pretty clear cut. We started off, we're our second fund now. Top Shelf began with one major thesis, which was the alcohol industry has very little institutional capital providers, certainly independent capital providers. Almost all the money to get brands off the ground come from friends and family, and sometimes a consumer fund will have their token one alcohol deal. There were no true experts in this space outside of the major alcohol players. So Diageo had a venture arm, Constellation had a venture arm. I came from Anheuser-Busch InBev's venture arm. And there's obviously a lot of scary things that come with taking money that early as an alcohol brand from a major player. So we set out being like, we are going to be that source of capital with one major focus, which is we call it velocity or rate of sale, which means how fast is your product selling on every shelf you're on? Or if you're on menus, how fast are you pulling off those menus? Or if you're online, how often are your customers coming back and ordering again? Even if you're only selling 5-10 grand a month or even smaller, are you able to outsell your competitors on every location you're in? Because the alcohol industry has such major institutional barriers to expansion. The distributors are huge roadblocks. The retailers are all primarily run by major chains and major hospitality groups. In order to unlock those pieces, a lot of people think you just have to kind of expand very quickly and get everywhere. But actually, that's the wrong answer. So we focus heavily on stay small, stay deep, stay focused, and make sure the customers that you have really love what you have. And by scanning the entire market, so we look of the 1,000 alcohol brands every year that launch, we try and look at close to 500 to 600 of them. So
Okay.
by taking a very strong data approach and aggregating more data and more brands than anybody else, you can see the handful of outliers. So our thesis is grab the top 5 to 8 high velocity, high rate of sale alcohol brands of that grouping every year, give them the first institutional money they're going to have. Usually they're sub $1 million in revenue. And then we help get them the right playbook and expansion and the connections and the right inside players to help them get to that next stage or even a few stages there where in a perfect world, they're well established for an acquisition within a few years of our investment.
So where do you see the industry going? Obviously, there's always these rumors about, the youth not consuming as much alcohol and, talk to me where you see the industry going and, where are the tailwinds and where are the headwinds?
Yeah, I mean, there's a lot of news out there about how Gen Z doesn't drink at the same proportion as prior generations, how people are finding healthier alternatives to alcohol that are emerging. But in the end of the day, what we're really seeing in the overall data, yes, people are beginning to consume at the same rates later. So by the time they're 30 or 35, those prior generations are now drinking at the exact same rates they used to. But even more, what you're seeing is people are finding ways to escape. They're finding the rituals to get together and they're finding ways to build community and friendships outside of the screens that they had. And time again, people need some sort of lubricant to make that happen. It has traditionally been alcohol, and that's been true for the prior 1,000 years. But where we really have positioned ourselves perfectly and why we are so bullish on the overall category of vice and alcohol is we're seeing brand new emergence as a result of the pushback against some of the alcohol consumption. We just made our first investment into a nicotine pouch company that's exploding on the back of Zin's success. We made our first investment into a Delta 9 THC beverage brand, which is introducing new consumers to hemp-derived THC, which is really just cannabis, just sold through a gray area that Target actually this week launched them in a test pilot in Minnesota. And we're going to having conversations with Walmart and Costco might be selling THC beverages on shelves. So you're seeing the emergence of sort of new trends, and we're currently in discussions with a leading kratom and kava beverage that is trying to introduce it to a new category of people doing very well doing that. Not what, the pieces you're hearing in the news and the OH7 and what's being pushed back by HHS. This is newer, lower dose. This is much closer to drinking a beer. We find anything that runs on the alcohol rails, these rails are big and established. There are going to be holes to be filled. And again, as long as people keep coming back to, I want to be with other people in person and enjoying and having a good time, there will be products that they're going to want to consume. And actually in this environment where people are pushing back against the old brands, we'll call them, the Jack Daniels and the Millers these are brands that people are tired of. They don't want to drink them like they used to. They're changing the way they consume with their friends. That opens up a huge door, for new startups, for new brands, for new customer groups that maybe didn't have something that spoke to them before. This is the moment for new brands to get out there. And we're seeing this, our best performing brand assets are the ones that find communities that felt left behind by the existing alcohol industry. And whether that be, our best investment out of Fund One is a boxed wine brand called Grazi. And we met the founder, Steven, when they were doing 30, 40K a month online. And he was selling $40 boxes of wine. It's basically like 4 bottles inside a box, like a Franzia box. But he's selling them for $40 instead of like $8, which we're all used to seeing. And we were like, what are you doing? And we looked at the data. He was selling these $40 boxes of wine, 90% retention rate month over month. And it's because he found that there are these groups of basically females in their 40s in the Midwest or in the South that just needed this exact product. They needed higher quality, no sugar, consistent, good tasting red blend and white blend box wine that they could open once and have open for 30 days without it going bad, pour when they needed it, both for cooking and for consuming and for sharing at parties. And that little piece got him to the point where people were buying $200 of wine every month in the boxes, having them delivered to their door. We helped him expand. This year he's going to do close to $60 million a year this year, in distribution only in 5 states, mostly online. That's an incredible growth. And that's a pocket that was just totally ignored. No one's ever seen that kind of box wine growth. And so there are a lot of room for growth here, and which is why this is the best moment really to be investing in this type of category.
That's awesome. And my fiance will be listening to this podcast, and she'll be a new customer of Grazia. I can almost guarantee you that. So they at least got one more customer based on this podcast. So a couple things which you said I want to spend a little more time on. Let's talk about, you mentioned cannabis and related drinks. Where do you see that segment of the market going? Because obviously it's been the promise of your rescheduling has been there for a while, and it's a promise unkept. Where do you see that going forward?
Cannabis is a fascinating industry. I was actually very early in the industry with AB InBev. I was ran the team that we on the back Constellation, which owns Corona and Modelo in the U.S. They made a huge investment, a $1 billion investment into a Canadian cannabis company in 2017 called Canopy. And AB InBev felt behind. They said, why is there $1 billion going from our biggest competitor in the U.S. going to this cannabis company, a traditional cannabis company? And this is 10 years ago. This is back when everyone thought it was going to be legalized then. So I actually ran the team at AB InBev where we basically forced it through the board. We convinced the internal group that it made sense to spend $175 million on a competitor to Canopy Privateer in the U.S., which was Tilray's U.S. arm. And all that money got set on fire 2 years later. I mean that every single dollar from every major alcohol company that went into cannabis was set on fire. Most of those companies are effectively defunct. They're running almost on the lean bare bones of what they used to be. That promise of that traditional cannabis industry never really emerged, right? And a lot of that comes down to there isn't that much money being made in that space. After the many tiers everyone has to go through, the testing, the very cheap price, very cheap to make the product. So your margins get squeezed all the way down. And the consumer appeal to going in dispensaries was actually pretty low. But what emerged 2 years ago was some beverage brands found, and some gummy brands as well, found an interesting loophole, which is if you derive the THC from the hemp, which is just a very low concentrate version of a cannabis flower, you do fall under an exception in the Farm Bill that allows for hemp to be sold willy-nilly. It's not an illegal product. Hemp is traditionally used for everything from, rope to T-shirts to putting in CBD beverages. There's a lot of uses for hemp that isn't cannabis. But if you extract out the little THC and kind of concentrate it and throw it in a can, you end up with sort of the same high as a traditional cannabis plant. And this loophole allowed a huge test to happen nationwide. It started in a few states, and this huge test was if we take this beverage and we throw only a few milligrams of THC in there, 5, 10, 2, and we just sell it to people online at home, and we put it on normal shelves, we'll call them bodegas and independent, liquor stores and beverage spots and gas stations, will people consume them at a higher rate than they have been, even in legal states? In the places where you could go buy cannabis legally from dispensaries, would they still? And the answer was absolutely. You put them in the liquor stores, all of a sudden, people are buying them at extraordinary rates. The early tests in Minnesota, 15% of liquor store revenue was coming from these THC beverages. When you think about that, you have beer, wine, spirits, and now 15% of these liquor stores' revenue is THC. In Connecticut, where one of our closest LP advisors runs the BevMax chain there, and he was telling us that 25% of his sales in the BevMax chain in 2023 were from these THC beverages. And so when we think about THC emerging, we're not thinking, you're going to go buy, we don't care about legalization, if I'm being honest. I think what we really want to see is not the traditional flower or the vapes, or that is not our space. That's not our lane. That's an existing industry that frankly, is a little bit it's on thin ice right now. There's not a lot of money being made. It's very unclear if there ever will be money being made. Where we really see it emerging, and actually the major alcohol distributors and suppliers and retailers are all really focused are on these hemp-derived THC beverages, where could be the next fourth pillar of the alcohol industry. Wine, spirits, beer, and then THC beverage. This could be sitting on shelves. It is currently sitting on shelves next to alcohol. This could be, we believe, as much as 15 to 25% of the entire alcohol industry could be that in the next 5 years. That's an incredible amount of growth. Right. So where do I see it going? I mean, this is how we've consumed our vice products before. It's in beverage format. The smoking and the vaping and the gummies, that's a unique way of doing this. This is a much more social, so we feel very strongly, both from the data, but also from a overall thesis, that that's the direction that the overall THC industry will be tying itself to, is this massive emergence of this beverage category.
So the other thing I wanted to talk about, because you mentioned this, the brand and the acceleration. So it's kind of a two-part question. First of all, obviously I like the thesis on these brands that are growing quickly and gaining traction. Talk about the attributes of the entrepreneurs that you invest in. And then as a subset of that, we've had a couple of interviews where celebrity involvement, they're involved in spirits. Obviously George Clooney is famous for what he did in the tequila space. Maybe talk a little bit about, first, where the entrepreneurs weigh into your decision, and then two, where celebrity endorsement or involvement, make a difference, if at all.
Yeah, very much. So the short end, the founders are a lot of this industry, but when we say our first stage gate is velocity and your rate of sale, like how fast is your brand moving, because consumers don't know who the founder is. That is a totally foreign concept, more or less, in the alcohol industry. And to have the $200 million to $1 billion exit, you need consumers to love the brand, not to care who the founder is. And that is tried and true. And that just goes back to the celebrity piece. I guess we'll kind of tie in the conversation a little bit. We did a study. We actually spoke to 2,000 consumers. Only 15% of them knew the celebrity tied to an alcohol brand that they were consuming. And that is not a lot, right? So you think about, like, High Noon blew up. Less than 5% of people knew that Dave Portnoy and High Noon and Barstool were involved in any way.
Right.
There are some exceptions to this. Casamigos had a much larger knowledge base of people that knew about George Clooney. Like, there are groups where that is true, or Terramana and The Rock. But by and large, of the hundreds of celebrity brands, most people have no clue. And so the reality, that means your brand has to be that strong that the celebrity can be a little bit of a jumpstart or a kick to your growth. But at the end of the day, those consumers have to want that product again and again and again, whether or not the celebrity is around. And I think that is the key data to pull out. Is one, is it just this splash? Because I ran this project AB InBev, where we launched a seltzer brand with Travis Scott in Cacti that blew up out of the gate, $5 million in the first month. And the next month, almost none of those people came back. I mean, it was like 95% dropout.
Wow.
Where, like, the stores couldn't sell it. The distributors were so stocked up on that gate. And that's solely because the product, frankly, just tasted bad, right? It was a bad tasting product at 7% alcohol, wrong brand, wrong thing. But everyone wanted to try it because Travis Scott, it's cool, whatever. This happens a lot. So we really stay away from the celebrity stuff. We tend to tell people that we'll do it. We have done it. In fact, one of our best performing brands right now, a Japanese hard seltzer and fun too, called Grog, Grog. They were founded by some YouTubers in the Mr. Beast universe called the Cold Ones, Max and Chad, who are incredible YouTubers. They have an incredible following of young people around the world. But they actually launched in California in 100 Bevmos. And those Bevmos sold over 70 cases a month per store in the first 3 months they launched. But then we looked back at the data 6 months after that when we invested, and every single one of those stores had ordered at least 4 times, which means whoever these consumers are for these products, they are coming back again and again and again. And then it's held true since our investment. They're actually launching a big round soon, because they're probably going to do close to $8 million this year in their first full year, which in 4 states. In the alcohol industry, that's unheard of. They might be one of the fastest growing RTDs of all time. And it seems to be very sticky because those consumers, They're sharing that product. They're bringing them to parties. It transcends who the cold ones are. They're not that famous.
Mhm.
They're famous enough to get people out the door to consume it, but they're not going to be so famous to drive this thing all the way to the promised land on their own. So that's a long way of saying celebrities aren't that important, but can be a nice kickstart if the brand works. And then where's founder involvement? Where we look for founders are ones, it's a grueling industry.
Right.
The quintessential example is, are you the type of founder that will sleep overnight in front of a distributor's mansion and wait for him to wake up in order to convince him to take your product on? And if you're not that kind of founder, if you're not ready for that, you're probably not going to be able to cut it. That's an extreme example. But it's a very hard industry to really work in. I mean, a lot of this is mafia run. You might have someone pat their gun next to you and tell you not to take my tap handle ever again. Like this is an industry where things are aggressive. Things move quickly. People won't pay you. They'll make you sue them for it. You just have to be ready for a real grind. And so we tend to look for a lot of grit in founders, people who want to go through that ride because the ups and downs are hard. The margins tend to be much thinner than you think they will after paying for marketing. You end up spending a lot on sales and distribution, and your cash conversion cycles are extremely difficult. By that you pay for product up front, you hand them to a distributor, they pay you maybe in 30 days, maybe in 45. The retailer pays them in 45 days. You can end up running out of money successfully. You can be doing very well and run out of money. And so we say grit and financial management are some of the most important attributes in the alcohol industry. I think the last part of this is fundraising, because of those cash conversion cycles, you have to be well connected and you have to be able to grind out a fundraising round, either that be through debt or equity or partnerships with your vendors. You need to find ways to keep the business flowing. That's true all the way at the top to the bottom. The AB InBevs of the world have the same issues. So as far as founders go, it's very important. There's a lot of new founders in the alcohol industry who are like tourist founders, I'd say.
Sure.
It seems cool for a minute. Like, I'll
Right.
launch a whiskey brand. And then 3-4 months later, they raise a little money and they're like, oh my God, this is not what I signed up for. This is much harder than I thought it would be.
Absolutely. So let's pivot a little bit. Let's talk to potential investors in the fund. But first, let's talk about the makeup of who are the types of people that are in Fund 1 and Fund 2.
We are a very broad makeup. I mean, by and large, it's family offices, it's high net wealth. It is some strategic individuals from the industry across the chain. But we've had the most success. You have to remember, most people, if you do investing at all, have been approached by some alcohol brand. Usually it's your friend's cousin started a rum brand and you've been asked to throw 20 grand at it. Or in some cases, my friend started a tequila brand and needed $1 million. I'd say 99.9% of those people that we talked to lost all that money, which is funny that they're coming to talk to us. But what they realized was they didn't really, why did they throw that money at that project? They wouldn't do that if it was a deep tech AI business. They wouldn't just throw money. They know better. They give it to funds who specialize, because ultimately they always look good on the deck. I always say, like, every alcohol brand looks great. It looks pretty. You're going to highlight cool retailers you're in, maybe some cool bars. You have photos of bars and restaurants. But the LPs that look at us are like, we lost all this money. We realized that having a professional vet good ones, we can even send them to you and you tell us if it's any good, and then compare them against, and then show us the ones that are better than that is clearly the best way to go. So we have a lot of success with high net wealth that are looking for exposure to the alcohol space, still want the fun and the engagement and the tangible consumption. You want to actually engage with these products and be a part of it, but also want to make money. In the end of the day, a lot of money be made in this space, and people know that. The exits are, there's about 60, 70 exits a year on average. That we did a meeting, the public median of those exit prices around $200 million. This is a highly liquid acquisitory industry. The major players outsource their R&D to the startup community, and they acquire very early stages at very high multiples. So if you can get the right ones, invest in the right ones, you can make a fortune doing it, especially in a good basket. The average there is going to be very high. And we've shown that success in Fund 1 and coming up Fund 2. But you can easily make some massive mistakes because so many don't ever get out of the gate. It's like 90% of them never reach $1 million in overall revenue over their lifetime, and that you don't want to be anywhere near those. You really want to try and stay away, because you can lose. We've talked to brands that have raised $25 million and have 70 grand in revenue this year to show for it. And
Well,
it's very easy to get in that trap. If they don't have the velocity, you don't know what you're looking for, you can get into some trouble. And so our LPs are really made up of people that want to make money, but still really enjoy the alcohol industry and want to be
right.
a part of the next big thing.
So potential investors, LPs, wealth managers investing in alts. I love you've touched on this before, but I always like to ask this question: why your fund? Why Top Shelf Ventures? Why now?
Yeah. I mean, we are looking at every brand in the vice and alcohol category for the absolute highest velocity winners at the earliest stages. We get in at extremely good valuations. We get all the protective provisions. We usually of the deals in fund two, we are on 90% of the boards. I think of the 8 deals, we're on 7 of the boards. We
Mhm.
sit there, we have a seat at the table, we make sure the value is being created, and then we push them to exit in a couple of years. We get them in a good position to exit so that the returns are very high. So why this fund? The returns should be very strong. But why us? Because we are the preeminent lead for these brands. I think time and time again, we get VCs, we have traditional angels, we have strategics who say we're not going to touch an alcohol brand unless Top Shelf gets involved. And we often even say this to brands. We say, if we go into diligence, you may not want us to go into diligence because if we say no, you might actually have a really hard time raising. And so we're at that stage where if we get involved in a brand, even if we only throw 250, 500K, there's millions of other dollars available to them all of a sudden. There are distributors that get opened up. Every distributor wants to talk to you, at least know who you are. Every retailer, all of a sudden, you're on their radar to at least pay attention to and look at. And all the potential acquirers, they see that we're involved. Now they know this is somebody we at least need to see what's going on with. And that's a lot of leverage in an industry that we've built over a few years. But where there's no one else doing that type of work, it becomes sort of natural that we fit a need that exists in this space. And, we continue to execute at a high level. So as long as we're seeing as many things as we can see, we're benchmarking them against everything else we've seen previously. And then we're doing everything we can to help them succeed. It is a formula for success overall as a fund.
Any final thoughts you want to share with our listeners today?
No, I mean, I welcome from any of the listeners if you have alcohol brands, not that are raising. I often say, don't tell me like, oh, my friend is raising. Tell me what you're drinking, and if you like it, I'd love to hear the new thing that you're actually consuming on a daily, if not weekly basis, or if you're into nicotine pouches or if you're into THC.
Yeah.
Please send me what you're actually consuming, whether or not you know them or not, because those are the things we love to hear the most. Is what is the new thing that you're addicted to? Not in like a not in a mean way, but addicted to in a fun way, please.
Right.
In a way that you just can't put it down. That's the type of products we'd love to get behind.
Right. Where can people learn more about Top Shelf Ventures and get in contact with you?
Yeah, please reach out to me directly, Jason at topshelf.ventures, or go to our website, topshelfventures.com, and just send me a note there. And love to engage with whoever about anything. Our line's always open, and we're a lean team. We take all calls directly. So
Fantastic. So for our listeners today, make sure you like, comment, share this podcast. And Jason, thanks again for being on the show.
thanks, Scott. Appreciate it.
Welcome back. I had some great things that we went over with Jason at Top Shelf Ventures. And, I mentioned in the beginning about velocity. That's his key metric. They prioritize brands with high rates of sale, indicating strong consumer demand and potential for growth. And, in these emerging vice categories, he talked about these THC ventures and these other opportunities in this fourth pillar. But velocity is being key because at the end of the day, there has to be acquisition potential. The alcohol industry sees numerous acquisitions every year with a median public exit rate of over 200 million, meaning strong liquidity for the successful brands. But the thing to keep in mind is in order to be successful, these entrepreneurs have to have grit, as I mentioned before. It's grueling. They have to have the acumen financially and how to run a business and how to handle up and downs of a very competitive industry. Well, something interesting he mentioned during the interview is that a lot of these entrepreneurs in the alcohol and vice space, they want to go national. They always are attracted to the shiny nickel of going public around the country. And he focused on brands staying small, staying deep, and staying focused. Instead of rapid, widespread expansion, he focused on deep penetration in specific markets and building loyal customer base, which is a more effective growth strategy, which is something I completely agree. And I've had experience in several industries where people try to go national and they don't even take care of their own backyard. And Jason is really, has the right insight on how to help these brands and these companies succeed. And for investors that invest along with him, he's got the expertise to not only get into the investment, but get out. So we've got some more great interviews coming up on the Emerging Managers podcast. And I encourage you to like, comment, share, and listen next time. And thanks for joining us.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.